Everyone talks about the mortgage, but nobody tells you about the other bills. Today, I'm going to break down the real cost of being a homeowner beyond your monthly payment. If you're thinking of buying a house, save this video. Let's start with the obvious one, the mortgage. Most mortgages consist of 4 things: PITI, principal and interest, tax and insurance. Let's talk about the P and I first. Principal and interest are going to be constant throughout the life of the loan. It will only change if you refinance it. Meanwhile, the T and I, tax and insurance, can change. Let's talk about the T. It stands for property tax. Even if you paid off your home or you buy in cash, you still have to pay property tax. In California, it's about 1.1 to 1.25%. It can be increased, but there's a limit to it, so it moves slowly in silence. Most people don't even notice it until year 5 or year 10 of being a homeowner. And for I, insurance can definitely change. It can be lower or higher. You can shop around and see which one offers the coverage that you like in the budget that you like. If you're already fine with it, you don't have to change it every year. It's up to you. Before moving on to the next topic, I just want to recap this. Mortgage consists of 4 things. Principal and interest are going to be the same for the life of the loan. But tax and insurance can change. So if your mortgage increases with time and you wonder why, come back to this video. It's because P and I stay the same, T and I don't. Moving on to the next topic, Mello-Roos or special assessment tax. If you buy a house in a newly developed area or new construction, most likely it's going to come with Mello-Roos. This special tax used to improve the infrastructure like roads, parks, schools, fire station. It could range from $600 to $4,000 a year. It's not fun to pay, but it's for a good cause. Imagine that your house is in the community that just established. You would want good schools, good parks, right? Those money goes to that. And if the school is good, it will bring up the home value. So it's a win-win. Just make sure that you know about it. The next one I want to talk about supplemental tax bill. This supplemental tax is not included in your mortgage. When you buy a house, you are not going to pay the same property tax as the previous owner. For example, if the previous owner bought it 30 years ago for $200,000, they paid the tax according to that. Now 30 years has passed and the property value went up to $1 million. You are going to pay the property tax based off the $1 million worth. The county takes about 6 to 8 months to catch up on what's going on, and when they find out, oh, this house has a new owner, let's make things right, they will send this supplemental tax bill to your house. The amount varies a lot. It could be a few thousand to almost $10,000. Imagine if you didn't prepare for this. It's not a fun surprise. You should know and even be prepared before the close of escrow. If you already closed on it, call your agent and ask about this. After the close of escrow, you as a new homeowner will receive a lot of letters. More than likely, half of them will be from scammers. But if you saw the supplemental tax bill, you need to pay it. If you're not sure about anything, call your agent. If your agent doesn't answer the phone, call me. Let's go to the next topic. The HOA. If you buy a condo or a house in a community with HOA, don't forget to pay the HOA dues. It's not included in your mortgage, and if you don't pay for a while, they have a right to foreclose your home. I've seen that happen before. Not my client, of course. For the next one, you might think it's silly, but believe it or not, some people forget about it. Utilities. Unless you plan to live by candlelights, you need to prepare to pay for electricity, gas, water, trash, internet, phone, and your 12 streaming subscription. All of these adds up. Budget for it. And lastly, I highly recommend you set aside about 1% of your home value for maintenance and upgrades. A house was not built to last forever. Everything has its life expectancy. One day, a water heater or a furnace can break down, and if you didn't have money set aside for it, it's going to be cold winter. Also, there are some routine maintenance that I recommend you do it. Change the filter of your HVAC, clear the gutter. All of these cost money. Even if you do it DIY, you still have to buy supplies. Every home needs love. So let's wrap up. The cost of being a homeowner is mortgage, which is PITI. The TI can increase, keep in mind. Mello-Roos for some area. Supplemental tax bill. Luckily, it's a one-time thing. HOA dues, utilities, and maintenance money. Did any of these surprise you, or did I miss anything? Let me know in the comment. If you're thinking of buying, let me know. I'm glad to help. See you at the next video.